There's really no other way to put it other than to say it's all coming together for them now as the fervor over jab passports reaches a fevered pitch, and companies like JP Morgan, BlackRock, etc. are talking about not allowing employees into their building unless they've received the poke. The two-tiered society is really coming into full swing. And at the same time that that's happening, the Department of Treasury has released its general explanations of the administration's fiscal year 2022 revenue proposals. And inside said proposal, on page 88 as it were, their plan to introduce comprehensive financial account reporting to improve tax compliance. Business income is subject to limited information reporting. Current information reporting of gross receipts exists for only certain types of revenue, and there is no information reporting on total deductible expenses. The tax gap for business income outside of large corporations from the most recently published IRS estimates is $166 billion a year. So that's the money they're coming for. The scale of this revenue loss is driven primarily by the lack of comprehensive information reporting and the resulting difficulty identifying non-compliance outside of an audit. So they're complaining that they don't have total observation of all accounts. And because of that, they're not taxing everything that they could tax. While the net misreporting percentage is only 5% for income subject to substantial information reporting, the net misreporting percentage for certain categories of business income exceeds 50%, and that would be tips. Requiring comprehensive information reporting on the inflows and outflows of financial accounts will increase the visibility of gross receipts and deductible expenses to the IRS. Increased visibility of business income will enhance the effectiveness of IRS enforcement measures and encourage voluntary compliance. Meaning, once people know we're watching everything that happens in their checking accounts, they will be forced to report every single cent. This proposal would create a comprehensive financial account information reporting regime. Financial institutions would report data on financial accounts in an information return. The annual return will report gross inflows and outflows with a breakdown for physical cash, transactions with a foreign account, and transfers to and from another account with the same owner. This requirement would apply to all business and personal accounts from the financial institutions, including bank, loan, and investment accounts, with the exception of accounts below a low-to-min gross flow threshold of $600. So in order to not get sucked up into this, you have to regularly have less than $600 in that account. Other accounts with characteristics similar to financial institution accounts will be covered under this information reporting regime. In particular, payment settlement entities would collect taxpayer identification numbers and file a revised form of the 1099-K expanded to all payee accounts, reporting not only gross receipts but also gross purchases, physical cash, as well as payments to and from foreign accounts and transfer inflows and outflows. So don't think that you're going to be able to use Venmo or PayPal and avoid this. And then here's this is the clutch thing right here. Similar reporting requirements would apply to crypto asset exchanges and custodians. Separately, reporting requirements would apply in cases in which taxpayers buy crypto assets. You guys, that's the feds coming for your Fundrise account, your Robinhood account, your Coinbase account, your Venmo account, your PayPal account, your checking account. Every account you own falls under this. They will have complete and total observation of all money inflow and outflows to every single person in this country. Black market gone. Now, why does that matter? Well, because like I said earlier in the beginning of this video, they're expanding this two-tiered citizens state where the unvaccinated are going to inevitably end up having to shop on a black market. And they're not going to be able to unless they have money pulled out of their accounts that never goes back into their accounts, just cash that is unaccounted for, in which case if you get caught driving with that, the cops will seize that and take it from you. This is the world we're living in. Dangerous times.